there's a lot of value that has been shaved off investors, wiped away, and I don't know what's your feeling. We've seen the markets attempting to come back on, and then you see again
a slide.
Yeah. What do you think is going on in investors' minds?
I think top of every investor is one thing I think we all agree as investors, it's a time to buy. I think we've agreed that for the last month or so since the pandemic, since the COVID was declared a pandemic. All the markets, I mean, anytime you're seeing an index is down 10%, I think if that is not a screaming buy, I don't know what is, you understand? So every investor, and by far both the local and the internationals I've spoken to, agree it is a time to buy. The question that has been is, you know, you get in now, say for Safaricom, you get in at 25. Guys got in at 29 when they just broke the psychological barrier of 30. You get in at 29. 4 days later, US has doubled the number, it goes to 27. So again, you buy when you're trying to average down, and I think most investors have really been trying to average down. But the problem with averaging, it's an expensive game. You can only average for so long. You don't have endless pockets. You understand? So it has gotten to a point where there's now fatigue, and investors are like, you know what, now let's wait for them to hit rock bottom. When they rebound, now we shall get back in. Because most of them are either now, their portfolios are now overweight to a point. Then again it drops, you're like, okay, this is a significant level, we can still get in, you average down. But then again, what you mentioned is that fatigue, and I think that's why now we're seeing the laxity in the markets, where the market is now just trading sideways. No one is really taking any significant portfolios. I think for liquidity purposes, you'll see some selling and buying here and there, but there's no really those significant jumps. And especially if you're looking at our markets, where now foreigners have totally, I think over the last 2 months, it's been sell-off. That has been the trend. So it's been foreign sell-off and locals trying to support the market. Partly because they have nothing else to buy. Second is because these things are, again, as we agreed, screaming buys. And again, we expect us to see a couple of sideways trends before we see any significant swings because of, again, the uncertainty surrounding it.
And we'll be talking about whether it's a screaming buy when we talk about the scenarios, possible scenarios from here. But coming back to foreign investors, investors are the biggest drivers of value in all African markets. We're saying daily turnover, they are driving, you know, anything between 60 to 80% in a day. And they are all net sellers today. So if this is the trend, so is it I'm just trying to see why do the locals have very different opinion from the foreign investors? Why are the locals buying and the foreign investors are persistently selling?
So if we start with the reason first why foreigners are selling, I think we've discussed that in terms of the risks they look at. And Africa, remember we talked about the developed worlds, then you have the emerging markets that come second, then you have the frontier.
Correct.
Yes.
So we are considered to be the highest risk.
Highest risk. At the bottom of that food chain, investment chain. So we're the highest risk. So whenever, not just a pandemic, but whenever there is a risk, a global risk, that of course is going to impact investments, where we expect the most sell-offs generally is the highest, the riskiest assets. I think even
emerging markets and frontier.
Emerging and frontier are sold, they become a bloodbath. So that's one of the reasons why we've seen foreign exiting. And that's why one of the reasons we've seen locals buying, because again, locals are not as heavily diversified as the international guys. I think for most of their funds locally, they're just Kenyan funds, especially if you're talking about Kenya. They don't have an offshore portfolio. So for lack of a better alternative, they only have to take up what we have internally. So that's one of the reasons you're going to see these guys exiting, and these guys just have to take it up. The other reason,
so the locals have no other options.
They have no other options. They have to buy. They have to buy. You know, they have to buy. And when these guys are exiting, because it becomes a dumping, for them now it becomes, again,
they're in for the long term.
Correct, and they're in for the long term. They understand, again, the market's better. You know, COVID has nothing per se to do with telecommunication like your Safaricom. You know, have nothing to do with your banking. So of course, it's going to change a few things here and there. But the core business, the core mandates remain strong. And I think we understand that more than the international guys. We have more solace. You know, we interact with these services on every single day.
We have nowhere else to go.
We have nowhere else to go. So when they're exiting and they're going to buy their bonds and their international, you know, the Apple and the Google, we are stuck with what we have internally.
And because the foreigners definitely have deeper pockets than the locals.
That's another point.
So is this to say that we are still going to see the values continue to slide down?
We just may, yeah. So again,
room for further downside.
There's room for further downside.
Yes.
Again, that's pegged in the uncertainty that neither you and I know today.
Absolutely.
Yeah. So tomorrow, God forbid, 500 people will die in the States. Another panic starts. You understand? So again, you start seeing that general slide. Yeah. Tomorrow they might. I know now they're doing clinical trials. Tomorrow, a vaccine may be announced that has actually worked. And again, we start seeing 10% limit up swings. So I think the direction of whether it will continue sliding or going up is pegged in the uncertainty that neither you and I know.